Anything like that? Sweet. Steve is the first to chime in. Daryl. Doug, good morning. Good morning. Thanks for being here. Yeah, I logged in a little early just because like I said, I'm new to Zoom, which sounds odd given that Zoom has been the thing for a year and a half now. I'm late to the party. In any event, Josh at NinjaTrader is a genius and helped me get set up here. I appreciate that. And looking forward to it. We have a great day today, great trading day, a lot of stuff to talk about. And we will dive right into it at 9 o'clock, 5 more minutes. Doug says Zoom works great. Glad to hear that. Glad to hear that. I'm in Chicago right now. It's a little rainy. It's not like really rain. It's not real rain. It's drizzly, right? We're in the 60s. Have my Starbucks coffee. I'm ready to go. So, it's all good. All good. Hopefully, wherever you're at in this great world of ours, it's pleasant weather. You're in a nice place. All right, I just got to move a couple more screens over here. Awesome. All right, I'm going to go ahead and mute myself for a couple minutes. Usually when I do these events, I start right on time, 30 seconds ahead of time. Again, I just wanted to make sure we're set up on Zoom, and I think we are. And so bear with me. I'm going to go ahead and if I could find the Zoom control panel, mute myself. I'm going to mute myself now. I'll be right back. All right, I'm back. Get my screen situation set up here, I think. Kevin asks, will this be recorded on YouTube as well? It's definitely being recorded. It's a good question on where you find the recording. I do not know the answer to that question, but I will find out for you. I'm going to type in some information here too, just so you know how to get a hold of me. Stuff like this, feel free to reach out, Jim Cagnina at NinjaTrader.com. Anytime, feel free to reach out for any type of question, any kind of trading related idea. Feel free to reach out. We're going to start in less than a minute here. You're welcome, Kevin. You are absolutely welcome. So to Josh and Ninja, thanks for helping me set up. This was way easier. I was a little apprehensive, to be honest with you. Way easier than I thought. I'm not sure how much time I have today, but we're going to go at least. We should make a full hour. We have a lot of things to talk about. I do a real similar presentation every Tuesday and Thursday, looking for trade setups in the E-mini S&P. Let's go ahead and officially get started here. My name is Jim Cagnina with NinjaTrader. Yes, you heard that right. We're going to go ahead and look at some trade setup ideas. I'm going to give you my opinions, the way I look at the market. I've been involved in these markets for many, many years. But my opinions aren't always right. Sometimes they're right, sometimes they're wrong, sometimes they're good, sometimes they're bad. And we're going to go through the discovery process together every Wednesday and come up with trade ideas. I do keep a notepad. I'll share that with you, and on things that work and things that don't work. It helped me remember stuff. So I'll share my whole process with you. We're going to get started right now. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that's an equation for opportunity, which is why we're all here. It's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition: money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now, I know that third part's a little tongue-in-cheek, but it's not really, because stress in life matters. When we're under stress, we tend to make bad decisions. I mean, that's been my experience anyway, and I think it's true. So be careful, be in a good spot. NinjaTrader offers really excellent day trade margins, smaller account balances. That's all good stuff, but don't go crazy with the day trade margins right off the bat. Use it gingerly. Use it in a manner in which you think it's necessary. Reach out to me if you're not sure where you fit on risk capital curve of things. We'll have a confidential conversation. Send me an email. Call me. Send me a fax. I don't care. Be happy to have that conversation with you. All right, let's do one last. I'm sure everyone hears me okay, but let's make sure everyone's in good shape. Is everybody good? You can see a screen. You could hear and everything. Just type in a yeah for me. That would be awesome. All right, great. Fantastic. All right, let's get right into it here. We're going to focus on the E-mini S&P today. And the first thing I like to do is I like to look at a daily chart, right? And why do I want to look at a daily chart? Because I want to figure out what my bias is for the day. Is my bias bullish? Is my bias bearish? Now, if my bias is bullish, I'm looking for places to buy, right? I know it's a date. We're doing J trades right now. We're doing we're looking at an hour, maybe time frame, something like that. But if I'm bullish, I'm looking for places to buy. If I'm bearish, I'm looking for places to sell. So I'll pop up a daily chart early in the morning, and not even early in the morning. Just I'll have it up, and I'm gonna look at it and kind of look, what is it telling me right now? And we've been in this bull market, this E-mini S&P bull market for S&P 500. It doesn't matter which benchmark stock index market you're looking at. This has been going on since 2008, right? If you go back and chart from 2008, we're up, right? A lot of factors, a lot of reasons why, and a lot of it, in my humble opinion, has to do with the zero interest rate policy, Federal Reserve Board. They come in and do a lot of stuff with QE and managing basically the money of the United States. So in setting interest rates and borrowing rates and overnight repos and all that stuff. So they've been kind of in charge. And I think, as a matter of fact, I think the president said yesterday, the day before, when he was asked about inflation, which is the big thing these days, I'm pretty sure the Fed manages that. Well, the Fed's job, of course, is to get full employment and to keep inflation in check. Those are the two official duties. But as a side effect, we have this bull market that's just been going. So we don't care really about 2008. We care about right now. And so we've kind of leveled off, right? It's in April and May, and we've kind of retraced back down a little bit. I just drew a real simple support and resistance line here from March highs and drew it all the way across. And the reason I did that is because oftentimes you see a support line or a resistance line, it turns into the opposite, right? So resistance turns into support and support turns into resistance. It's just a phenomenon that I've noticed over a long period of time. Joseph says, can't fight the Fed. Can't fight the Fed. You cannot. Now, good news though. All right. So I'm actually a Fed fan. Let me just throw that out, and we'll get to a 10-minute chart and look for some trade ideas in a second. But this is a tough job. This is a big job, and it requires a lot of skill and a lot of data and a lot of depth, not only mechanically and quantitatively, but also from a PR point of view. So there's a lot of moving parts here, and you have all these Fed speakers going out and speaking all the time, and you got to pay attention to that kind of information. Okay, second area, real quick. I have this area here of what I'm calling recent resistance. Right, we had a pretty big green candle, couldn't close above it. Next red candle tried, couldn't close above it. Next candle tried, couldn't close above it. And then we, have 3 pretty big red candles. And bad news comes in 3s, right? I mean, how many of you have, it's just in life, bad news kind of comes in 3s. But, this isn't bad news, because in futures trading, we can go short instead of go long, right? We could sell something and try to buy it back at a lower price to make money, or vice versa. So not really bad. I'm just saying that in terms of, my investment portfolio with 3 big red candles is not good. So right now, I am not bullish today. I am bearish today. And let's take a look at a 10. I have a fib line here, but that's, here's one other thing I like to do. I like to show a fib line. It's magical. Fib lines are magical. They don't always work, and they don't give you an exact entry place. They don't give you an exact exit place. They give you kind of an idea, right? An area of interest. And, on this from here to here, on this move down, I'm not going to call it a correction, because the word correction doesn't make sense. The market's not incorrect. There's nothing incorrect about a move down. It's a move down. So don't use the word correction unless you're an Elliott wave person. All right, Elliott wave people get a pass on using the word correction. That's it. In any event, we came back and we barely closed over the 61.8%. Based on how I have my fib line drawn from the highs down to this recent contemporary low. And, we didn't close above it. We were just kind of fighting. And, we did close, but not for very long. And then we just kind of pushed back down. So that kind of reaffirms my idea that up in this area here, we're going to have an area of resistance. And resistance isn't a number. It's an area. It's a zone. These markets are so volatile, you can't call it that. All right, let's go. I'm going to set this up a little bit better. NinjaTrader chart. I have a trading panel open on the right hand side, and I have a 10-minute chart. A 10-minute chart. I've been doing this a long time, and I've simplified my life. And I like to see an oscillator. We have a MACD at the bottom. I like to see volume profile. We have a volume profile on the left, this histogram, these series of histogram bars, and I'll talk about that in more detail. And at this point in time, that's all I have. I want to look at these candles, and I want to try to determine what the candle themselves are telling me in relationship to the MACD, or the oscillator. You could use, I don't know, anything, the CCI. I mean, there's a whole bunch of different types of oscillators that are available on the NinjaTrader platform. And just right click, and then you could literally, go to the indicator section. It'll open it up on the left-hand side, and you'll see all of these common and some not so common studies that you could customize. This is when you know that the software is in depth and it's professional quality stuff. I mean, we got the Weissman awesome oscillator. No idea what that is, but most oscillators, they kind of oscillate around a zero line, right? And then they have an overbought level and a oversold level. We've been using the MACD as we've been doing this calendar year, just from a popular consent point of view. Everybody said, let's put a MACD up. Let's put a MACD up. So that's what we're doing. Douglas says, please ask attendees to change their chat window to all panelists and attendees so that we can all. I'm not sure what that is. Again, I'm new to Zoom, guys. I'm going to leave that to you. I will read out the questions live though as they come in. Okay, so this is my simple setup, and let's take a look here. What's going on? This I'm definitely bearish here, right? This is doom and gloom right here. Not really, but you know, we're making new ground. We're breaking new ground down. Let me kind of expand this up a little bit so we could see it. And let me get my crosshairs up. Let's look at 830. 830 bar is right here, right? Let's go back to that pointer. 830 bar. So it didn't do that much, right? So we've been down all morning, down all morning. 830 bar was a little bit light. It wasn't that substantive. It was the high to low wasn't that big. It wasn't until the 840 bar that things started kicking in. And you know, at 840, a lot of times that bar is way more important than the 830 bar. I have a 10-minute chart up here right now. It's super easy to change my time frames. It's super easy to add multiple charts to your desktop. We're going to stick with the 10-minute chart. And my idea on a 10-minute chart is when I look for a trade, I'm looking for, I have a multiple 6, right? So 10-minute chart, my trade duration is going to be anywhere from a minute to 60 minutes. I multiply it by 6. If I'm looking at a 30-minute chart to make my entry decisions and my exit decisions, then it's a 3-hour, right? So it'd be 30 minutes times 6. That's just, again, my opinion, how I like to think of things. You know, the paradigm of the market changes throughout the day. Today could be a one-way ticket down all day for all I know. Who knows? You know, we don't know, but it's not looking really good. And the idea that there's a counter trend opportunity here isn't a real good one. Isn't not a real good one. I'm not a fan of counter trend trading. You know, every once in a while you're successful at it, but a lot of times you're not. You know, trend is your friend is a big thing for me, and especially today, on a day like today, where we have these this powerful downward impetus here. The other thing I didn't share with you is my notes, right? So today's the Wednesday. You know, the economic releases, there's a couple different types of economic releases, right? There's a couple of things that there's planned news, right? Things that are on the calendar. We know it's going to happen. And sometimes it affects the market. Sometimes it doesn't affect the market. And today there isn't anything really, right? There's no jobless claims. There's no, a PPI. There's no, there's none of that stuff, right? It's just EIA Petroleum Status Report, which is a weekly report done by the Energy Information Administration, which is a subset of the Department of Energy, U.S. government report. You know, this is pretty much a supply report, right? So this is really important if you're trading crude oil. It's really important if you're trading natural gas, those energy markets, right? And sometimes there's surprises in there, but all eyes are on that report when it's released at 9:30 Chicago time. The second thing, and we talked about the Fed a little bit, is the FOMC minutes are being released from the previous meeting, right? The previous meeting was April 27th, 28th. And I don't know why it takes them so long. Maybe the clerk typist pool is a little light at the FOMC, the FOMC board meetings these days. But I mean, it's always about a few weeks after the event, and those are being released at 2:00. And those are kind of important because it might gain some insight as to what was discussed at the last meeting. You know, we already know the general overview. We already had the press conference after the meeting, and so we already we know all that stuff. But every once in a while, the notes come out, and something's little. You know, someone will pick out a sentence and say, "All right, this is bad," or "This is good." So in any event, that's today. It's not till later today, right? So there's not anything that's really planned. Now the other type of news is news that isn't planned, right? News that isn't planned. You know, some rockets being fired in the Middle East. I mean, that's not planned. It's it happens when it happens, and then that becomes news, and that becomes market moving information, right? Sometimes. So the planned stuff, be ahead of. I use Econo Day to check it out, so I just know what's going to happen that day. I know the next Fed meeting is until June 15th to 16th for the FOMC anyway, and so I'm not that worried about it. I do have a link here for their calendar if you want to get into the weeds here, because their calendar, actually, I'll type it in, put it in the chat box. They do have links to reports you could read and stuff like that, which may or may not interest you. In any event, notes. This is from yesterday. We try to, again, I'm in real-time sim mode, guys. This is a simulated live exercise, right? Demo exercise. Everybody can get a demo account at Ninja. I'll put in some links here in a second and how to get that. It's super easy to download, easy to install. And of course I could help with any of that. So yesterday, patience was the number one thing. It was a good day yesterday. We were lucky on our sim trade. We waited. We were patient on our entry. We were patient on our exit. We followed the trend. Now, the one thing that did happen, though, the trade duration continued through 10 a.m., right? So 10 a.m. Chicago time. We were doing these things from 9 to 10 Chicago time. It's 9:14 right now, Chicago time. So I made a note of it. Now, if the trade goes bad, I'm going to make some notes here also and say why it went bad or why I think it went bad or what happened. So anyway, that's just kind of how I present information. All right, let's go back. Let's go back to the chart. Any questions, anything like that, type them in. I'll read them. I'll pick them off. We'll keep rocking. So again, counter trend trade, not interested in. Not interested in. Easy to adjust the properties here. I'm going to change the low here to 40.55 so we get a little bit better view. And we're at the low right now. So bias is bearish. I want to pull. I want this thing to. I want a little bit of rally. I want to be patient. I want to put a limit order into sell at some point. And I'm not going to do a counter trend trade. I'm not going to buy the low because I don't know where the low is. I don't know where support is. We have, a series of lower lows. There's a lower low here. There's a lower low here. There's a lower low here. We have a lower high, lower high. Again, this is bearish in my mind right now. I drew an area of pre-market resistance. This white line up here. I'm kind of wiggling my mouse up here. And we could do the crosshairs to make it a little more conspicuous. Right here around 86.50, right? 86.50. I know it's a strange day today because we've been going down all night substantively, but pre-market, I identified this area. Now, these areas of resistance isn't a number. It's several ticks big, right? Because the candle could poke their head into that cloud and test it. I want to see closes above this line. Hope more than one or two candles. It's 9:16. We have a few more minutes before the next candle forms. So right now I'm going to be patient. I'm going to wait. This dotted line right here, this blue dotted line you see, is an extension line that is the top of the value area for my volume profile. And so it's an important area of interest to me. And it corresponds roughly to my white line. It's not exact. It's a few handles off, a couple handles off, but there's an area of interest right there for sure. This point of control, I don't know if that's a brown line or what do you want to call it? That's the actual point of control on the volume profile. And then the bottom is literally the bottom of the value area, right? If you go below that line, then it's considered prices below value. So between the dotted blue lines, value area, that's roughly one standard deviation of volume that's occurred since we opened last night, right? And typically they're bell-shaped curves, and we'll investigate that a lot in more detail in the coming weeks, and even more so today. But it's been a strange volume profile because the whole bell-shaped curve idea is a little bit out the window right now because of just this downward day. Okay. Whew. So where would I get short? I'm going to do a relatively conservative trade idea. Now I'm using the big E-mini S&P, right? And when I say big, it's called E-mini. There's nothing mini about it. It's a big contract. Don't get me wrong. Notional value is $50 times the price, right? $50 times the price. So you're controlling a lot of S&P 500 with just one mini S&P. You could do this in a micro E-mini S&P. I know it's a weird name, micro E-mini S&P, but you could certainly do that. Okay, so I want to see this last high candle approached. I want to see somewhere between the value area and that high is where I'm going to right-click my mouse. And I'm simply just going to, I'm trading from the chart today, not the DOM. And it's just so easy. So I'm just going to click on the sell limit order and it sends it, right? It sends it. And you could adjust it with this label. Or, I don't know, it looks like a cocktail stir, kind of. Looks like a drink stir. But, you could, you could move it around and it moves the order. What I just did was, now we're in a real-time practice account, but if this were a live account, I would have just sent an order to the exchange. This would be at the exchange in the order book, waiting to get filled. This is a relatively conservative order entry. I'm patient. I'm not, too excited about it. If I was more aggressive, I'd try to get, I tried to get in a lot lower price, but I'm not. So this is just sitting there waiting in the book, right? It's in the CME group, and Globex is the exchange, is the electronic exchange marketplace that matches buyers and sellers on a first come, first served basis. FIFO, totally fair, totally transparent. We're not routing orders to different, ECNs, like you would with with a spider, with the ETF equivalent here would be what, the spider, the SPY. This is one place where all the action takes place. So it's transparent, it's fair, it's fast, it's efficient. With the NinjaTrader software, it's super fast and super efficient. James asks, could I explain bullish and bearish? Yeah. So bullish just means I think the price of this market's going to go up. Bearish means the opposite. I think the price of this market's going to go down. And in the time frame that we're considering, right, the 10-minute time frame, I think the market's going to go down. Right now, it's not a straight line down, James. Right, it's bouncing around. You can see the price moving around here on the right hand side. It's volatile. Buyers and sellers are in this this death dance of dominance to try. It's supply and demand, and that's what's happening here. So right now, that the sellers are there's more of them than the buyers from a contract point of view. So it's just a terminology. I mean, if you say bullish, you think the market's going to go up, the prices are going to appreciate. If you say bearish, you think the market's going to depreciate. So that's some good nomenclature. It's good to know, and I appreciate the question. Okay, so I think I get that. I think that's it on questions so far. All right, so right now, and we're going to do a trade just to do a trade later on today, just so you can see it in action. But for now, we're going to try to apply a little bit of science. It's 9:21. We have a relatively new candle right now, and we're going to be patient. We're going to wait. Now, the other area of interest that I have, and let me just kind of let's go over and talk about the volume profile. This is also unique to futures trading. You don't really get this with your Fidelity equity account, and it literally shows you. It's a histogram, and each one of the histogram bars, and you can see it, they look like rectangles, are a certain height, right? They represent two different price ticks on the chart. So for instance, right now the market's trading at 6040.0, and it's bouncing up and down a little bit. The E-mini S&P trades in quarters. So one tick is 0.25. And each one of those ticks is worth $12.50 per contract. And you can see it moving around right here. Well, every time two ticks are counted, whatever volume was traded during that interval shows up in the histogram bar. So it tells us, where is price happiness? Where are buyers and sellers most interested in doing a deal? Now, you're not doing a deal with a seller or a buyer. This is all electronically matched, but that's the idea, right? That's the idea. So I'll show you how to do. I'll show you how to do the settings. How I actually made these settings, because you could customize these as well. So this dark blue area here is called the value area. This again is one standard deviation worth of volume. The blue at the top, price is above value. The blue at the bottom, price is below value. Now today's distribution is nowhere near a bell-shaped curve because we have a lot of activity late night at the top. I started this literally remember, these are 23-hour markets. So I started this last night at 6 o'clock East Coast time, 5 o'clock Central time. And I didn't start it when I logged in. That's how I set my setting. So this is all for the entire session. I like to see the entire session because don't forget, we're not the only, us in the United States are the only ones that express opinion in this market. We're not the only ones that invest in it. We're not the only ones that trade in it. And we're not the only algos in the world, right? So you have you have three very interesting opens. You have the Asian Open, you have the Frankfurt, Germany Open, and then you have the London Open. in those time frames, you have institutions, commercial institutions, you have specs, you have all sorts of market participants that come in and express opinion on a market. They get in, they get out, maybe they stay in for a long period of time. And so that volume overnight to me is important. It matters to me. And I want to see where the volume distribution was that night. So, and some folks will just set it for, you know, I just want to see the cash open when New York Stock Exchange opens. That's the only thing I care about. Well, okay, that's fine. I mean, if that's part of your analysis, that's good, right? So I'm just going to right click. I'm going to go ahead and just go to indicators. And the way I have this set up, I've added at the bottom, it says configured. I've added the MACD and the order flow volume profile. Only two things I've added. And if I highlight one of them, it changes the right-hand panel and gives you all of the different types of inputs that you could change, right? And some of these are standard, some of these are not standard. For instance, the value area is 68%. Now that's one standard deviation. That's what I was talking about. Most people wouldn't change that. Ticks per interval, you know, you could change that to 4. Let's go ahead and change that to 4, and that'll represent a full point. Remember, we talked about each. There's the E-mini S&P is traded in quarters, right? In quarter ticks, and 4 of them equal 1 point. So from 68 to 69 is 1 full point, or 4 ticks. And it changes the profile because what happens is the height of any given histogram bar is only 4 ticks, is 4 ticks now instead of 2 ticks. And then the volume that's posted in there, I don't know if you could see it, it might be too small. The red numbers here on the left, that's the volume of each bar. Okay, so I'm going to leave my setup this way. Opacity and line colors and all that stuff you could change. So it's feature rich here, and there's a lot of stuff you could do, but that's simply how you do it. I mean, you're right clicking on the chart, adding it, making it yours with the colors and with all the different parameters that you could change. Okay, back to where we're at. The point of control, area of interest, oftentimes, not always, oftentimes it acts like a magnet, right? Attracting the market. And as Dan Gramsci would call it, well, this is price happiness. This is where, from an overall point of view, buyers and sellers are happy at this price. You know, this particular instrument is priced right there. Now, the point of control also changes over time, right? If we had a whole bunch of volume up here, let's say 40.95, you know, that could, you know, it could move up, and all the point of control is the longest histogram bar, the histogram bar with the most volume. But it's still very important to keep an eye on that and see how it changes. And if it does take a quantum leap, then, you know, the paradigm of the market has changed. So, for instance, last night before the open, oops, I didn't want to do that. I want to hit the plus sign right up here. The point of control may have been up here at 41.04. Then when the open happened, we had all this volume down here. And so it shifted from up here to down here. Paradigm of the market changed. Market decided to be bearish. And this is where we're trading right now. We're getting close to our entry here, guys. So we're, you know, we talked about being patient. And I know for those of you guys who are following me every week, you realize it's painful. It's boring. It's not fun. It's, you know, it's frustrating. You know, we literally, we're in a situation here where we missed it by a couple ticks so far, right? And the natural inclination is to chase it, right? Is to say, oh, I missed it. I don't want to miss out on the move. I know I should sell one here because I'm going to be able to buy it back lower at a better price. And so your inclination is, I'm just going to chase it. My experience, that's a bad idea. You know, the second best thing, there's 3 things that could happen on a trade, right? The first one is the best outcome, and that's you make money on it. The worst thing that could happen, the third option, is you lose money on it. And then the second, the middle, is you don't get the trade and nothing happens. There's nothing wrong with that because there's always another opportunity the next day, and there's always another market the next day. Okay. So for this particular entry, so Tim, thanks for the question. Tim says, can you explain reasoning behind the specific point of entry? Right, because I'm envisioning, here, let me just spread this out a little bit more. And here's what I want to try to envision what could happen here, right? So we had a lower high, and a series of kind of jig-jaggedy highs, right? So I want to be, point of control, I wanted to be above the point of control. I wanted to be below the top of the value area. And I wanted to attack this candle's high, slightly below it. At that point, we'd have another lower high. That was my thought. And it's a lot of times these wicks, especially if they're bigger wicks, do get attacked temporarily, and then the market falls back into place where you want it to align. So I'm looking at this candle height, the top of the candle, the high of this candle here, the red candle, the previous red candle, and it just falls into a sweet spot right above the point of control and right below prices, the top of the value area. So that's kind of what my thought process was. So in my opinion, the candles do tell a pretty good story. The previous 10-minute candle here, the green one, we had a pretty big wick. The wick at the bottom is as big as the body at the top, right? And so buyers are coming in. When you see these wicks at the bottom, buyers are coming in, pushing this up. Think of a piston, pushing it up, causing price to go up, right? But we don't have a wick at the top. We pivoted to the new candle, and right now the new candle is not doing much. It's just kind of hanging out there. So it's kind of at a resistance point right now, and I'd like to see it pop up here a little bit higher. We're about 2 handles away right now, and try to get short. That's my thought process. Whether it's a good thought process, Tim, or a bad thought process, Tim, I don't know. But I have my notepad right here. I'm going to write down what happens. And by the way, I do take a pen and pencil and write it down. I have a notepad here, and it helps me remember patterns. It helps me remember mistakes. Most importantly, mistakes. It's a good practice. I know it sounds kind of corny, but I'm telling you, I've been doing this for many years. It works. It's something to help you, just in life in general. But I don't know. I'm sorry, I digressed. Okay, so we haven't got our trade entry yet. It's okay, because the number one, if I have a top, if I had the top 10 rules of trading, right? Top 10 rules of trading. In the top 3 certainly is patience. Patience is in the top 3. Now, if I weren't talking to you guys and we weren't interacting like this, I'd be looking at some other charts. It's really easy to toggle between charts or add additional charts on NinjaTrader. I would be, looking at the Twitter feed, looking at the news, try to assimilate all that real-time information that's coming through right now. But since we're focused here with you guys right now, I'm not doing it. So that's a great question. All right, so I'm going to put a stop loss right. All right, so let me read this out loud from Joseph. Jim, how do you handle your stop losses? Do you simply have something in mind and manually handle it? Well, you could do, there's what's called ATM strategies here, which are basically, bracket trades, right? You could do your stop, your entry, your stop, and your profit target all together. That's one way to do it. And then as we go through the discovery process here over the next several weeks, I'll start adding those to my arsenal right now. But right now I would manually add what I would consider a relatively catastrophic stop. And I'm in a classic ES. Micro ES, if your account size is smaller, might be a little bit better to do it. I'm looking at my white line, right? This is my early morning area of resistance, and I'm just going to right click. I have a couple options: buy stop market or buy stop limit. I'm simply going to click buy stop market, and there it is. So now it's in. If this were a live account, this would be shot off to the exchange. We're at the exchange. Now, obviously, I can't get filled here until I acquire a short position, right? Because the market has to go through me to get to my stop, right? So everything is good in the universe right now. I could hang tight. But by the way, just as a little bit more information on stop loss management, that's another top 3 rule. And that might be the number 1 rule. Put your stop loss in, even if it's a catastrophic stop loss. And when I say catastrophic, I mean, you're going to adjust it to match, the volume profile and whatever other indicators you have on your screen. Because really right now, I think the stop loss is going to be a little bit north of 40.78.5, right at this high here. But we're going to be able to move that down dynamically once we get filled. But get that stop loss in. It's best practices. And believe me, we've seen markets behave in a rather high velocity manner. I'll be polite. High velocity manner. So make sure you have that in. So that was a great comment. I didn't have mine in. I waited. That's a bad practice. Get it in. So this is just, yeah, I mean, this is just showing, I think you're talking about the A and B here, Brenda. You know, I don't pay attention to that. I mean, that's literally, that's the bid and the offer, right? So you see the bid and the offer. Ask, it's called ask. Sometimes, depends on how old you are. You know, there's an ask, there's the ask and the offer, right? So, you know, if you're selling your house, you're making, you know, you have the ask, right? How much money you want for your house. If you're buying a house, you're going to bid on it, right? How much money you're willing to buy that house for. And there's a difference between the two prices. And in this particular case, it's one tick. It's very small. It's called the bid-ask spread, right? And when you have a one tick bid-ask spread like we have here in the E-mini S&P market, then that's a good market. That means there's volume there, and there's you know, a lot more opportunities to get in and get out at the price that you want. That's all that is. If we show it on a trading ladder, let's just pull up the trading ladder. Let's just not even beat around the bush anymore. This will make it. Where's my control panel? Other screen, Jim. I got a couple of screens here. So this control panel is all powerful. Doesn't look like much, but it is much. Okay. Anything you want to do here starts here. You want to add something new, you click on that new button, and you get a drop down menu, all sorts of stuff, right? So I'm gonna look for Superdome. I'm gonna click it. It's gonna open up a Superdome. I'm gonna move this over to another screen so it's out of our way. And this might be a better way to look. All right, I'm gonna hover my mouse in the middle so it stops. You'll see the yellow area here is the last traded price. This is mark to market. This is where the market's trading, right? I froze the dome by putting my mouse in the middle. It bounces around a lot. 40.64. The last time a buyer and seller agreed to do a deal, right? The last Globex matching price is right there. 40.64. On the right-hand side is the ask or the offer. There's 17 contracts in the hopper being offered. And then one tick below, it's 63.75. You'll see 42. That's the highest bid. That's the highest price someone's willing to pay, right? And the difference is literally one tick, 0.25, right? $12.50. So that's what that number is. That's what the chart number is tracking. This is a better way to look at it. But I didn't have the dome up, so. And you could trade from here really easily. You know, we'll get into that at another time. I have a couple different accounts here, so let's just change it to the one I'm in. Down at the bottom here, you could scroll around. You could add different markets. It's super cool. This is I have the micro here. And now the interesting thing about the micro E-mini S&P and the E-mini S&P is the prices are pretty much in sync, right? This is the same market. It's just a smaller size contract. That's all. Salvador, I do believe a recording of this will be available for sure. I shouldn't say for sure. Well, I'm going to say for sure. Yes. Well, I'll make sure you get the information on how to get that. Okay, so that's kind of how. So let's go back for a second here. Let's just look at what we're seeing here. You have 60 contracts, literally on the bid here. Waiting to be filled at the CME group. There's 60. So if I were to place an order to buy one at that price right now on a limit order, then I would be 61, right? I'm in line. It's like I'm at the bagel store. And I hope there's more than 61 everything bagels, because I don't want to get to the front of the line and then they're out of bagels, the one I want. I don't know, everything. Onion bagel. I don't know what I like the onion bagels, by the way. My wife isn't crazy about me at the onion bagels, but anyway, sidetrack. So anyway, hopefully that answered that question for us. All right, so today in my notebook, what I'm going to write down, could you guess what I'm going to write down? I'm going to write down, we missed, how much did we miss it by? We missed our entry. We missed our entry by maybe a tick or two. By maybe a tick or two. We were close, but no cigar. And then the market behaved the way that I thought it was going to behave, right? We broke back down. So now I'm going to have to ask myself, what could I do differently tomorrow or the next day? Well, maybe I tighten up my entry a little bit, a couple of ticks. It would have been a nice trade. Didn't get it. Okay, so what? There'll be another opportunity tomorrow. It's as simple as that. And I will just put a sample trade in here before we end. It's 9:40. We have plenty of time. We have a new candle that just popped up here right now. But that's what just happened to us, right? Am I frustrated? Yes. Am I upset? No. There'll be another opportunity tomorrow. Forget about it. Anyway, everybody with me? Let me just pull this other screen thing out of the way here. Okay, awesome. So let's regroup a little bit here and let's take a look at what's going on and let's think about, is there another trade idea? Do we want to leave this trade idea up? Is this something that, hey, maybe we'll come back up? And then my answer to that is sometimes that's a good idea and sometimes it's not a good idea. And in a day like today, and again, this is my humble experience, I could be completely wrong, but this afternoon, this market may change. Buyers may come back in. Remember, we're on day 3 of down days. Buyers might come back in this afternoon, push this thing back up, and this would be a bad trade idea, right? So I probably wouldn't let this percolate forever, right? And to cancel, it's really simple. I could either, you click on this close button on the right, or I could just simply right click on the actual label or trade ticket, whatever you want to call it, hover my mouse over and cancel the order. I could change it too, but just cancel it. Same with the stop, right click, cancel order. Super easy. Now we got a blank slate. We're starting over again. And now we're trading at the bottom of the value area. We went from the top to the bottom and, we hovered around the point of control. Now here's how interesting this point of control is. Look at how many candles bisected. Is bisected a word? Yeah, bisected. Bisected the candle. 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 12 candles traded where we said, hey, 40-70 price happiness. Interesting. Something to think about. Maybe we'll never see that price level again today. I'm not so sure. But again, counter trend's not my thing. Until we see a series of candles that establish an area of support. And I'm going to go to my drawing tools and I'm going to find a rectangle. And I'm going to go ahead and put a rectangle down here, which is going to be my idea, at least right now, of where support is, right? And we have a low here at this candle, which is the 20 candle. We have a low on the contemporary candle right here. We touched the top of my rectangle. And remember what I said earlier, support and resistance levels, in my mind anyway, especially in a volatile market like this, with a lot of opportunities, is not necessarily one price. It's not 40, 55. It could be 6, 7, 8 ticks thick, right? So that's why I draw it here, and I tell the counter trend traders, guys, if you're going to put your order in, don't put it at the bottom. Let the candle penetrate your rectangle. Let it penetrate your rectangle, and make sure you don't get a close below it. Because if you get a close below it, then maybe the trend is still down for the day. Yeah. So Tony, great comment. You're absolutely right on that. Tony said, let me read it out loud. Was your entry on the wick? It was 2 ticks or 1 tick below the top of the wick. Yes. It probably would have executed on the body of that candle. It certainly would have. It certainly would have. And again, it's something right down in my notepad. You know, was I too overly cautious by a couple of ticks on my entry? That's the question. I don't know. Maybe. But you're right. You're exactly right. You identified that. You know, would it have been better? And I'll put my mouse on it at the top of this. See this red candle right here? I'll go back to my crosshairs to make it easier for everybody to see. But you know, that's hindsight. You know, past performance. You know, but it's something to think about. If I would have put my order there, yeah, we would have got filled probably. We would have got filled for sure. Instead, it was up here, right? It was on the actual wick. Who knows? Who's supposed to know? It happens. But yeah, your observation is 100%. Yeah. Okay. So James, absolutely. So we're going to go ahead. I'm going to put that order back in here. I will go ahead and put the order back in here just to get filled and to demonstrate, demonstrate how to get in and out, right? How to get in and out. So I'm going to kind of pick we'll pick the same area. You know, we'll pick the same area. We'll go ahead and just, you know, try to sell one in a limit. And I'm just going to drag it down here a little bit further to improve our odds, right? And once we're filled, you're going to have a position. We're going to create a position, and I'm just going to chase this a little bit. This isn't good practice. I'm just going to chase it just to show you. I know, why didn't I do a market order? Well, it's in my DNA not to do a market order. So, so anyway, we're gonna chase it. We're gonna get short with a limit order. All right. So now we got short. So now we have a position, right? And for those of you who are brand new to futures, this is different than when you're trading equities. It's not really different, but it's easier, right? I'm short one. Look at it, it's red up here on the upper right-hand side. It shows me red is, you know, short, green is long. I'm short one contract, right? I'm short one contract. And the software smart, it shows me where, you know, where I'm short from, right? 40, 67 and 3/4. And then it shows how much money I'm up or down, right? So we're doing okay right now. We're doing well. The market's going back down. Now, in order to close a trade, right, I want to buy a contract back, right? Let's go ahead and put our stop loss in just to protect ourselves, because I told you guys it was a smart thing to do. So I'm going to go ahead and put a stop loss in. Now, the last leg of a trade is the profit target, right? Where we think the price is going and where we would get out to make a profit. So I'm going to go ahead and do that right now. And I'm looking at the bottom of the value area. I'm looking at the bottom of this big red candle, and I'm going to do what James suggested. I'm going to target the bottom of that candle, that red candle. It's not a bad plan. So let's go ahead and buy one on a limit now, because I'm short. So I want to buy one. Right, so I've sent that to the exchange, right? So now I have, this is the anatomy of every trade that's ever made in the world, by the way. Position, profit target, stop loss. It doesn't get much more complicated than that. When people say, oh, Jim, future trading is so complicated, how so? You're either buying, hoping the price goes up, or selling, hoping the price goes down. So in any event, let's see what happens here for a couple seconds. So, you know, mark to market right now, we're making, 1 point, right? Or $50. Now it's 3/4 of a point. You know, it's moving around in real time. So to get out of a trade, I have to buy something back, you know, and you could do it the way I'm doing it. You could just buy a contract at the market just to get out. You know, it's up to you. But from a trade management point of view, I'm going to be patient here. And I'm going to wait, right? I'm going to be patient here. I'm going to wait. And furthermore, I'm going to add risk to this trade by moving my stop down to above above this area of short-term resistance right here. I'll draw another rectangle. Rectangles kind of make me happy. So I'm going to draw another rectangle here. And I'm going to say, all right, 1, 2, 3, 4 candles. We still haven't penetrated here. This is really short-term time frame though, because this candle here did penetrate. So did this one. So did this one. So did this one. None of them closed over that though. So you have to respect the volatility, right? So Paul says, hi. So the price action tells me I am in a range. How do I trade this, please? Well. So again, I really like the volume profile. I like the value area. I like the point of control, this range here. You know, there's a lot of conventional wisdom to say, hey, we're selling at the top of the value area. We're buying at the bottom of the value area. We're in a range bound market. I know I'm just giving you a general idea, but that's something to consider. And we didn't even talk about the MACD yet. I mean, we didn't even talk about it. You know, right now it's not helping me that much because it's, you know, it's not in a convergence divergence mode right now. Remember, MACD is all about convergence and divergence. And as a matter of fact, from the last event, I think I might have an equation up here. Yeah, so here's what the MACD oscillator does, right? So the MACD line is the 12-day exponential moving average minus the 26-day exponential moving average. The signal line is the 9-day exponential moving average of the MACD line. And then the histogram, these white histogram columns here is just the difference between the two. Now, whoever came up with this equation, I don't know, but it tends to help. It tends to help with trend change and with velocity. So that's how that equation works. I'm sorry, that's a little bit in the weeds. I understand that, but it's fun to talk about it. So right now, just looking at it, we're crossing. I like to see crosses. We're at the zero line. It's not helping us that much. All right, let me lower this down. Okay, so now let's take a look at the candle. There's some exciting stuff going on right now in the cloud, in my rectangle. Now we're penetrating it. We're up and in there right now. We're getting waxed on our wax is bad on our position, right? We're short. We're down, 7 handles. That's $350. That's a bit. That's on a classic. It's $35 on a micro. That's why micros could be your friends. Just keep that in mind. And with NinjaTrader, the Ninja, if you get a NinjaTrader license, I know it's a little scary. Everyone's that's $1,099, but you're going to get a 9-cent micro commission, right? And if you're trading any 10 round turns or more, 10 contracts or more, you're going to make that. I don't know what the break even numbers, but you're going to make that back pretty quickly in relationship to any other brokerage firm you're going to trade with. So don't discard that outright. There's a free version. You could fund with $400. There's a lease version, fund with $400, and there's the lifetime license. You could fund with $400. So or whatever your risk capital is. Obviously there's accounts that are a lot bigger than that, but you have all sorts of different options here with NinjaTrader. So, and I'll put some links in here in a second. 9:52. All right, I don't know if I'm going to get turned off here at the hour mark, but let's take I don't know how Zoom works. I know that there are some kind of limitations in the past, but I'm going to keep talking until I get turned off. All right, so we penetrated our rectangle. We haven't closed above it yet, so I'm not too freaked out. I don't like it. I don't like where we're at. We're still at the top of the value area, but that's part of the patience. That's part of what has to happen. There's a lot of stuff that's going through my brain right now. We have adrenaline, we have dopamine, we have all this stuff that we can't control. Your emotions, you can't. These are chemical things. They're physical. They're real, right? So you have to. You have to. I hate when people say I have to. I don't have to do anything. But one trick is to come up with processes to help you keep those emotions in check, right? And coming up with a trade plan and a trade idea, practicing. In the pathway here is 14-day free trial, then open an account, trade the micros, get a feel for real money trading, right? Real money trading, and then go to the classic, the bigger ones, if you're so inclined. That's the pathway. But that's the hardest part. I mean, that's the hardest part. Supply and demand you could figure out, I think, in my opinion. All right, let me get some links in here. We're going to stick around for one more candle. So we got 7-8 more minutes. What do we got? So I'm going to cut and paste this thing. This is the 14-day free trial. If you haven't done it already. Oh, I got the wrong. All right, I'm gonna no. I'm gonna put this link in. My bad. This is on the Infinity Future site. Doesn't matter. Still works. Fill that out. My mistake. My bad. We're okay there. You want to open an account? I'm going to put another link in here. This is the Jim Cagnina gratuitous sales pitch. It's only going to take a minute. You don't have to sit through this very long. And then my phone number, I'm going to type in my email address. It's simple, easy to remember. Jim.Cagnina at oops, nope. I got to get that out of my head, man. NinjaTrader.com. Hit the enter button. Then I'm going to go ahead and hit, I'm going to paste my phone number in. If you're going to call me, I welcome it, by the way, but give me like 15, 20 minutes to get another Starbucks coffee when we're done. That's all I'm asking for. So Tim asked, all right, let's go back while we're waiting for the next candle to form and see what our fate might be here. Tim asks, a good question. Do you scalp or swing the E-mini? Thoughts on those approaches? Scalping's too hard. Scalping, all right. So I was in high school, I was on the floor of the board of trade before you were born, probably, Tim. And that was the thing, right? You would scalp because you saw the big order flows coming in at the top of the pit. You knew what the direction was. You had the edge, it's called. And so, you would try to get in front of it, right? So, you would try to sell a contract or buy a contract and then turn around and flip it immediately for a tick. If you're lucky, you got 2, 3, or 4 ticks. And you did that a million times a day. That was scalping. Now, when you're scalping, the competition is way, way fierce. The competition is algos. The competition is just the sheer number of market participants and the sheer volume. And to get in there and try to get a tick for a scalp is really, really tricky business. Hard to do. So from my point of view, and I've come round circle, I started in this seat, in the brokerage seat in 2001. And I've come around circle, and it's look for 2, 3, 4 trade ideas a day. Pick your places, become a master at something, and be patient. And maybe your trade duration is going to be 5 minutes. Maybe it's going to be, maybe it's going to be an hour or longer. I think, again, my opinion, most people have more success doing that. Most people have more success doing that. Smart with your stop management. The risk reward ratio now on this trade is that's the other thing you got to think about. Let me just throw this out too, Tim. The idea that here's another idea I hate. I'm gonna buy or sell a contract. I'm gonna have a 8-tick stop and an 8-tick profit target, or a 10-tick profit target and an 8-tick stop. Some arbitrary numbers. Well, but now you're not looking at the candles. You're not looking at the supply and demand. You're not looking where the buyers and sellers are. So I don't like that approach either. I know I just totally sidetracked you right there, but I thought I would throw that in anyway. All right, so one more candle here. We're going to call it a day. I do want to remind everybody, trading futures, options on futures, involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although it's an opportunity. It's equation for opportunity, also an equation for risk. So be careful with that. We're not talking about past performance ever in these things, but that's a red flag in the field when somebody else is talking about past performance. It just doesn't make sense. I mean, just be careful with those folks. And again, we're on a real-time practice account, real-time sim account today. There is a promotion going on. I want to show you this if I haven't lost it in my madness here. Bitcoin. There is a new thing. There is a new thing called the micro Bitcoin contract. It was launched a couple of weeks ago by the CME group. Micros are a big deal. I have a micro quote board right here. I just want to show you guys. And micros aren't micro. They're not that small. You get a lot of leverage with these things. And we could talk about leverage next event. Be careful with the leverage, but we could talk about the unique differences between ETFs, equities, options, and futures markets. But in any event, open and fund account by May 31st with a lifetime license. And then you're going to get commission-free trading for micros for the whole calendar year up to $1,000. So in essence, you're going to pay for your license. So you'll find it all over the NinjaTrader.com website. Feel free to actually jump on that. If you're thinking about opening, it can't, May 31st is, you still got a couple weeks to think about it. You still can get that 14-day free trial in, right? And figure that part out. All right, that's it. I promise you no more gratuitous sales pitches. We're going to take one overview look at the market. I'm going to answer a couple last questions and we're going to rock and roll and get out of here. Hopefully I'll see you guys again next week. Let me scroll down here. And if I missed your question, type it in again real fast. There's this chat box is big and scrolly. Osford, all right, so hang on a second. Time out. There's a flag on the field already. Osford, how can we follow you on your trades? We're going through this discovery process so that we could learn how to fish. Do not come in here and do exactly what I'm doing unless it's consistent with what you're doing. Okay, we're talking about it out loud. We're talking together as a community. Tell your friends this is free to come. And my ideas aren't, necessarily that great, right? I'm just kind of sharing my experience. So don't do that, but feel free to come every week for sure. And if there's something unique you want me to see, like someone asked about Bollinger Bands, and I don't know, VWAP or something else. I can't remember the question now. Send me an email. Jim.Cagnina@NinjaTrader.com. I'll be happy to add it. We'll talk about it. We'll put the Bollinger Bands up. We'll put the VWAP up, and we'll talk about what they mean at the next event for sure. Dog, thank you. I really appreciate that. Thank you, Joseph. Appreciate that. So Salvador says, where can I get the lifetime license? Best the multi-broker. Go to those links I sent you. Or send me an email. And did I close it? Or send me an email, open an account right here. And then there's other places on the website where you could actually, buy the license and all that stuff, download for free, explore the website, or send me an email and I'll give you the exact link you're interested in, whatever that link may be. All right, guys, I just want to leave you. One last overview of this trade right now. I'll be honest with you. I probably would keep it. I probably wouldn't bail. I'd probably tighten my stop. Again, this stop is pretty high. And, I'd probably drag it down a little bit to kind of be above my rectangle, but not too far, not too close to it, above that wick right there. So I'm tightening my stop, limiting my risk a little bit more. And then when I'm looking at my target market, since I'm going to be here for a while, I'd probably lower that as well. All right, I'm going to leave you with this. Be safe out there and be good to each other. Hopefully I'll see you next week. Have a great time. Thanks.